Hi guys, my name is Ismail, and in this video today I'm going to do a breakdown on a trade I took on Gbpusd. To begin with, I would like to talk about the entry model behind this trade that I took on Gbpusd. It's a very simple trade. So what do I want to see on the daily time frame? Normally I take almost all my trades on the daily time frame. The only pair that I take my trade on the 1 hour time frame is gold, because gold is a very volatile pair. So I take most of my, or I look for my setup on gold on the 1 hour time frame. Apart from gold and BTC, and then all other pairs I used to take them on the daily time frame. So currently the trade is playing out. We've not reached we've not hit our TP here, but there's a higher chance that the trade is going to hit my TP. You can see it yourself. So what do I want to see? This is the pattern that I want to see. A break of structure. Like I said in my previous video, if you are looking for any entry pattern at all, you must make sure that there is a break of structure before you start looking for your entry pattern. So the entry pattern I use on this trade, let me first of all draw it before I actually explain the logic behind the entry, like the entry model. So now let me first of all do something so that you can understand the entry pattern very well. We have a break of structure here, which is um our first thing. Like the first thing that we want to see is a break of structure, right? Now after the break of structure, we want to see a fair value gap. We want to make sure that market leaves behind a fair value gap here. We all know FVG. So after market leaves an FVG, this entry model is very close to the last entry model I used on gold, but this one is on the higher time frame, the daily time frame. So what do I want to see again? I want to see markets coming back, give us an inducement. After market break structure, market come back, but and tap into the fair value gap, but did not tap into the order block, which is down here. So that first pullback becomes our inducement. Now, what is the validation of this entry model? For this entry model to be valid, we want to see after market does this, after market break structure and pull back into the fair value gap. What do I want to see? I want to see market going back, like after the pullback into the fair value gap, the market now returns to the last high created if it is an uptrend, then before it comes back and tap into our point of interest, which is our order block. But if market tap into our fair value gap, but do not complete the cycle is like pulling back to the last high created, then if market do not engineer liquidity, because that is another entry pattern which I have not even talked about before, but in my upcoming videos I'm going to talk about an entry model that market actually engineers liquidity instead of giving us a structural liquidity like this one. So now let me mark out my order block. So here is my order block. So what does the market do? The market comes back, take the inducement, which is the structural liquidity here, and will continue in its original direction. So in this case, it is not compulsory. The last entry model we discussed, market actually takes this high, but this particular entry model is not really compulsory to break another structure again. All we want to see is a break of structure, which is this break of structure, the market giving us a fair value gap here, Then after the break of structure, market pulls back into the fair value gap but did not tap into the order block. What I mean by tap is mitigation. If market do not mitigate the order block, simply means that order block is still valid for us to use. Then after market tap into the FVG, then now returns back to the last high created before the pullback. So that the pullback, that the market that actually returned back to the last high created is what validates this entry model. But if market tap into our FVG and did not return back to the last high created, the entry model is invalid. So now let's go to the trade so that I can explain it to you on the trade. Now on the daily time frame GBP USD, before I started using this entry model on this pair, I've backtested it on this pair and know that this entry model actually work on it. I can actually show you some of the some places that this entry model works. Let me show you this one. We have a break of structure here, right? But before you start looking for your breakup structure, make sure that you've already determined the direction of the market. Make sure you already identify the direction of the market. So now what do we have here? After we have this breakup structure, the market did not leave behind a fair value gap here. So what do we do in this case? This is a very risky trade for us, but you just have to lower your risk. What do? We all know that order block is the last opposing candle. So since we are bearish on this, since the breakup structure is bearish, we will now look for the opposing candle, which is the bullish candle here. So this bullish candle becomes our order block. So what happened after that? After market pull back and tap into the order block, it now continue its original direction. If I am to take this trade, I normally target only 1 to 2. I don't target more than that. If I'm to take this trade, that is where my entry will be, and I only target 1 to 2. And this trade doesn't even take much time. I think within 1 2 3 4 5, within 4 or 5 days, you've already hit your TP. Now let's check this place too. We have a break of structure here too. We have a break of structure here. Let me label it. So this is daily time frame, and like I told you, after this break of structure, market actually leaves a fair value gap here, which is this particular fair value gap. But this time around, market didn't actually pulls back into the FVG. But what do we have here is a risky trade for us. But when you are taking this kind of trade, you just have to like minimize your risk. You take the opposing candle, which is the since we are the break of structure is in the downside, so you just have to look back and the other block is going to be opposing candle, which is the opposite candle. Since we are bearish, since the break of structure is in the downside, the, ne- your other block will be the last bullish candle, which is the particular one I mark. So if I'm to take this rate, this is how I will take it. I'm just targeting 1 to 2, no more than that. You can see that. So after market tap into the order block, what do we have? Within 3 days, our trade has already hit our take profit. So, and the same thing happened here to this particular trade here. That is what happened. Let me quickly do it. Let me quickly mark it out. We have a break of structure here to the downside, and our last opposing candle, where is it? This is our last opposing candle, this bullish candle here. So after market tap into it, what do we see? We only target 1 to 2, right? So in this particular one, we didn't hit this trade actually hit our SL, but it is normal in the forex market. So that is what really happened there. But after that, we have about how many TPs? About 2 TPs, and this particular one here. We have break of structure here, and we have our last opposing candle. This particular one here is a miss, sorry, it's a miss entry. So that is what is currently going. This entry model here, that is what is currently going on. Before you apply any entry model on any pair at all, make sure that you back test that entry model to know whether it works or not. You understand? So what do we have here? Let me now break down this trade. What do we have here? We have a break of structure here, which you can see very clearly. After that break of structure, market pulls back into our order block. Sorry, market pull back into our fair value gap. We all know what fair value gap is. After market pull back into this fair value gap, but did not tap into the order block, it's a signal that wow, this is the market is already forming your entry model cycle. After market tap into the fair value gap, what happened after that? Then it now pulls back to the last high created before it tapped into the fair value gap, but didn't tap into the order block. We all know that order block is the last opposing candle. Since we are bullish, since the break of structure is in the upside, we now our order block is going to be our last opposing candle, or the last candle before the impulsive movement, or before the imbalance, which is this candle here, which is this black candle here. You can see that that is our order block. So what happened after that? I placed my entry here, but let me show you the before of this trade so that you will not doubt exactly what I'm doing here. GBP USD. Let me quickly check whether I can. Okay. I'll maybe when I'm editing this video, I'm going to attach the before of this trade because it's not currently on this phone, it's on the other phone. So that is how I was able to cash this trade, and you all can see that the trade is currently running and very close to my TP. Hopefully by today I should be able to hit TP on this trade. So guys, that is it. So if you derive any value at all, don't forget to share this video with your friends so that they can benefit, and you can like and comment if you have any questions too. My DM is open. Thank you and God bless you.